Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global markets. I'm your host, Lewis, and I'm excited to have you join us today. We're going to kick off our show with a story that's been making headlines around the globe: the escalating trade war between the US, China, and other major economies. As we've been following the news, President Trump has announced a 90-day pause on most tariffs, but this move has been met with skepticism by many experts. They argue that the uncertainty created by these tariffs will have a detrimental effect on not only the U.S. economy, but also the global economy as a whole. To break it down, let's take a look at some of the key points. The U.S. has imposed tariffs on goods from several countries, including China, Mexico, and Canada. In response, these countries have retaliated with their own set of tariffs on U.S. goods. This back and forth has led to concerns about the impact on global trade, economic growth, and even the potential for a full-blown recession. Now, some proponents of the tariffs argue that they will help to protect American industries and jobs. However, others claim that the tariffs will ultimately hurt U.S. consumers and businesses, as they will lead to higher prices and reduced demand. We've also seen reports suggesting that China has applied retaliatory tariffs of up to 84% on U.S. goods, which could have significant implications for American exporters. Meanwhile, the European Union has also imposed its own set of tariffs on U.S. products, further escalating the trade tensions. As we navigate this complex and ever-changing landscape, it's essential to consider multiple perspectives and stay informed about the latest developments. We'll be keeping a close eye on these events and providing you with in-depth analysis and insights to help you make sense of it all. So, what does this mean for investors, businesses, and individuals? How can we mitigate the risks associated with these trade tensions? We'll explore these questions and more in our upcoming segments. For now, let's take a quick break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we navigate the twists and turns of the financial world. Today we've got a tale of tariffs, tumult, and temporary reprieves that's left investors scratching their heads. It all started when President Trump announced a 90-day pause on his administration's reciprocal tariffs, sending U.S. stocks soaring in a historic rally on Wednesday. But as the saying goes, pride comes before a fall, and Thursday saw those same stocks tumble back down to earth. It seems the market's euphoria was short-lived, and now everyone's wondering what's next. As Senator Amy Klobuchar pointed out, chaos is still up, and it's still a 10% tariff. So, while the pause might have provided some temporary relief, the underlying uncertainty remains. And let's not forget the Democrats' calls for a probe into possible insider trading, which could add another layer of complexity to this already murky situation. Now, we've got comedians like Stephen Colbert weighing in on the matter, joking that economic nuclear winter is one pause for 90 days. While it's easy to poke fun at the situation, the reality is that real people are being hurt by these trade wars. As Seth Meyers would say, it's not just about the economy, it's about the economy of emotions. As we try to make sense of this tariff tantrum, it's essential to remember that markets hate uncertainty. And right now, there's plenty of it to go around. So, what can investors do? Well, as the great philosopher Warren Buffett once said, "Price is what you pay. Value is what you get." Perhaps it's time to focus on the fundamentals and look for opportunities in this volatile landscape. In conclusion, the tariff tale is far from over, folks. We'll continue to monitor the situation and bring you updates as more information becomes available. For now, it's essential to stay informed, stay vigilant, and always keep your wits about you. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a closer look at the current state of the market. As we've been discussing, the threat of a U.S. trade war with China has sent markets tumbling, leaving many investors wondering if we're on the precipice of a bear market. To put things into perspective, a bear market is defined as when a broad market index, like the S&P 500, falls by 20% or more from its recent peak for a sustained period. And while we did get close to that threshold earlier this week, with the S&P 500 opening lower on Monday and down 17.4% from its high on February 19th, the situation is still fluid. The good news is that after President Trump's 90-day pause of reciprocal tariffs, the market did experience a bit of a surge on Wednesday. However, this was short-lived, as stock markets continued to fall on Thursday, with the S&P 500 closing down 3.34%, the Dow Jones Industrial Average falling 2.46%, and the Nasdaq Composite dropping 4.31%. Now, we know that market volatility can be unsettling for investors, but it's essential to keep things in perspective. As we've seen time and time again, markets can fluctuate rapidly, and what may seem like a catastrophic decline one day can turn into a buying opportunity the next. It's also worth noting that circuit breakers are in place to prevent panic selling during periods of high volatility. These market-wide circuit breakers can temporarily halt trading when the S&P 500 index drops by 7%, 13%, or 20% in a single day, giving investors a chance to take a step back and reassess their strategies. So, what's the takeaway from all this? Well, as we always say on the Riskwiser Zone, it's crucial to approach investing with caution and a long-term perspective. While it's impossible to predict with certainty what the market will do next, being informed and prepared can help you navigate even the most turbulent of times. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.